So Richtech Robotics was suggested for me to take a look at, and I just have one sentence for you regarding this stock. This company will not retire you. Stay away from this company. I will show you exactly why. There's some very worrying trends here, especially if we look at the revenue that this company has. So right now, this company has a market cap of 583 million. All right, remember that when we look at revenue a bit later. And if you look at stock price, you might think that they were higher in the past, and now they've dropped down here very recently. This is not the case. However, the company is valued almost at all-time highs here. We can see a market cap that 2023 it was 380 million, and then for 2024, it dropped down a little bit. 2025 here it surged, so end of 2025 640, 66, and then early February here we see somewhere between 580 million and 640 million, and this is in line with current market cap here, 583 million, just outstanding shares multiplied with the value of each share. So the company is valued very, very highly now. And how come, since share price have dropped by so much? Well, you find this in the amount of shares outstanding, because shareholders in this company are being diluted into oblivion. That's why I say this company will not retire you. Just take a look here, 2022, 2023, those are the years. You have the share count here on screen. So this is in thousands, so 44 million, then 70 million, 121 million, just insane growth in the amount of shares, and this makes it just more difficult for this company to actually deliver on the promise of creating great shareholder returns in the future. Each share that you own in this company with current dilution just gives you a smaller and smaller right to the profits of the company. What about the profits of the company? Well, for the full year here of 2025, we can see that, all right, 5 million in revenue and then 4 million before that. And revenue was actually higher in 2023 and 2022, and then it declined on later years. And remember this in relation to market cap. Do you think it's reasonable to pay, let's see what the market cap was again, 580 millions for a company with a market cap of 5 million? Just, if it was pure profit, the earnings, it would take you 120 years to recuperate your invested amount if it was just pure profits from this revenue. But then, of course, we have cost of revenue as well. Nothing wrong with the unit economics in this case, but we also have operating expenses, and this makes this company operate at a loss. That's why they need to continue to sell shares to stay alive. Nothing uncommon here for smaller startups. We've seen this in the past, but where is the path to profitability? I don't really see it in this case. I've watched demos of this product, of the robot serving drinks, and in my opinion that level of automation just doesn't stand a chance against the competition. We've seen, for example, McDonald's use automation in the form of Flippy, the robot in America. Far more impressive in my opinion, whereas in the case of the robots that Richtech Robotics produce, I don't really see the value in them. They're not that impressive. They take the cup, they put it under the machine that's pouring the beverage, and then give the cup to, for example, Jim Cramer, who was on one of the videos. Where's the added value? Does it take out the drawer with grounds, ground beans, the rest product of coffee, and throw it away and rinse the machine on its own. And like, it doesn't, they don't really demo that when you watch it. And we see the number of sales, they're speaking for themselves. If beverage chains saw a huge value in this, well, then sales would be much, much higher than they are today. If companies really could save a lot of money using the robotics here. So the product is clearly not up to standards yet, in my opinion here. So just on those things alone, just on the dilution, just on the lack of revenue, and how extremely highly valued this company is right now. You're paying 120 times revenue, roughly. That's the price to sales. That's just insane for a company with growth that was being reduced here. And we could also see here that they saw massive volatility here, some recent events, and a securities class action lawsuit causing shares to drop 20% following reports that Microsoft denied a partnership. We always see security lawsuits after large drops in share price in America. I don't like this. I think that the law firms are just taking advantage of retail traders, making us pay money to use their services when nothing really comes from these. You are taking responsibility. It's your money, at risk. And even at larger bankruptcies such as Lehman Brothers, the bankruptcy case in that one, you're not gonna get much, even if it's real security fraud. As shareholders, we are last in line always, and the people who give normal loans have a higher right to the capital in that case. So just wanted to clarify that as well. But yeah, stay away from this company. It's very likely not to retire you. That's been it for this video. As always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.